Welcome back. I'm Pratap here. Today is the 7th March 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated in our previous end of the day report. Before that, all of you please note we are providing complete free training on supply demand zone price action, and it is a highly expensive training course. The cost is over $8,000, but we are providing complete free training. And all the training lessons are already available at our NeoStock YouTube channel. So at our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community, so click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. I kept all the training lessons in this playlist. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one according to my training instructions provided at our Telegram channel. I provided the link to our Telegram channel in this video description. So join at our Telegram channel. At the Telegram channel, top of the window, you can find pinned messages. Click on the pinned messages. There you can find all the training instructions. So learn this course. As per the training instructions, definitely you will become a very good independent trader in the coming months. Now let's get into the evaluation of the high liquidity zones, the performance evaluation. And the trend, this is the only one high liquidity zone got executed today. Yesterday, end of the day report, we identified 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 high liquidity zones we got. And this one we are having fine-tuned 5-minute zones. Multiple fine-tuned 5-minute zones are available. And a couple of the fine-tuned zones gave 2 trades today. So let's focus on that first. And then we will focus on Nifty also. A quick discussion about Nifty, how our supply demand zone chain might have helped our traders gain around 110 points today, or maybe even more. That also we will discuss. Okay, this is a software. According to our software, this is a drop, 2 base candles and a rally candle. And this 75-minute zone is fine-tuned with 15 minutes time frame. See the fine-tuned, how many 15-minute zones are here? Here we have a rally, 2 base candles and a rally. And here you have a leg-in as a failed ERC, 3 base candles and rally. And also below here we have a drop, 1, 2, 3, 4, 5, 6 base candles and a rally candle. So these are the 3 15 minutes, fine-tuned 15 minutes we identified inside the 75 minutes high liquidity zone. Okay, within those order flows, again we fine-tuned with 5 minutes time frame. Within the 5 minutes, here we have a rally candle, 1, 2, 3, 4, 5 base candles and a rally candle. And then here you have a rally, 1, 2, 3, 4, 5 base candles and a rally candle. And also below here we have a drop, base, rally. And this 5-minute zone, fine-tuned 5-minute zone is acting as a high liquidity zone. See, multiple times this zone is tested. And last time also you see drop, base, rally created. LOTL zone, maybe that way we can say. And recently also once again you see same area, drop, base, rally is created. So definitely we can plan one more trade next time also. Okay, so these are the 3 fine-tuned 5-minute zones. And today what happened? We got the trade. Prices entered into the zone at what time? Today at 9:45 minute candle. But this is slightly fine-tuned 5-minute zone is pierced slightly. It is within our stop buffer value. The blue color I have drawn here. One change I did is generally we use a 3% as per my recommendation. 2% stop buffer is the standard value. Why I have selected 3% is because nowadays many of the stocks are holding within the 3% level. That's why we took a little extra risk. But this particular stock, the stop buffer value is a very big value, huge values. So that's why what I did, I adjusted back to 2% level. If I adjusted to 3%, more risk we are getting. More risk means we can't take beyond 2%, you can't take the trades. So that's why in this case, stop buffer value adjusted to, that means I reduced the stop buffer. Even with the reduced value also, the price is within our stop buffer only. Even 2% also it did not violate. Good. Anyway. And after that, the prices were trying to reach. What is our 15 minutes target? Here we have a 15 minutes target. So this is the one. We have maybe a drop, 1, 2, 3, 4, 5, 6. Actually 7 candles also coming. But okay, fine. Anyway, it is only for the target point of view only. Or some may consider this as a rally and 1, 2, 3, 4 base candles that way. Anyway, this is okay. This is only for target setting point of view. But the problem that is happened, failed to reach the target after we got the entry. It is not able to reach the target. See here, prices we got the entry and the zone is slightly pierced. The fine-tuned 5-minute zone is slightly pierced and then prices are moving. It didn't reach 15 minutes target. But minimum 1:3 RR is a successful trade for us. But this stock gave you up to 1:5 RR it has given. Up to 1:5 RR. That means there are people may exit at 1:5. That they are the people get maximum profit. Those who don't book the profit at 1:5, expecting prices to reach the 15 minutes target, probably their trailing stop might have been hit at 1 minute. If you would have gone for a 1 minute trailing stop, here, this is the one, right, where you got the trade. This is the area. See, somewhere here 1:3 RR it might have achieved. Once it achieved 1:3 RR, you will start implementing trailing stop to protect our trades. Those who don't book your profits at 1:3 RR, you will be started. Somewhere here probably, let us check where 1:3 RR is achieved. Okay, here. After prices reached, you will be started implementing trailing stop. See here you have a drop base rally is there at 1:3 RR level. After that you don't have any zones, demand zones are available. This is only the nearest. And here this one is violated. So that means just below 1:3 RR you might have exited your trade because your trailing stop has been hit. Got it? That way you might have put. But those who are using, sorry, where is it? Yeah. So those who used up to 1:5 RR, you might have got the maximum profit. Okay, performance statistics point of view, I am capturing up to 1:5. But in reality, where you booked, they're all depending on your strategies. Whether you booked your profit at 1:3 RR or you booked your profit at 1:5 RR, or you are waiting for reaching 15 minutes target and you are using 1 minute trailing stop after completing 1:3 RR. And finally, you might have exited because your 1 minute trailing stop loss has been hit. There you might have booked the profit. These are the different ways people might be following. Out of all three, 1:5 RR, the maximum profit our software has given today. That is the opportunity it has given. Some of you might have utilized it. So up to 1:5 RR level, what is the profit we got? That is what I am calculating. Let me open Excel sheet. And today trend gave us the two trades. The first one, up to 1:5 RR level, it has given 4,390 rupees profit, which is 3.7% ROI as per one futures margin cost. And the margin cost is around 1 lakh 16 or 17,000 is there. On that margin cost, it has given 3.7% ROI. Okay, this is the first trade. Okay, again prices reached. Can we take our second trade here? You can't, because why? The zone is already pierced. When a zone is pierced, your fine-tuned zone, you can't plan your trade. I'm talking about HLQ zone strategies point of view. If you are using other pierced zone strategies, that is a different story. But anyway, pierced zone strategies, planning in 5 minutes is not appropriate, because we are limiting 50 zones. Lot of analysis you have to do when you want to reuse in the 5 minutes, because the 1 minute order flows, new order flow should be available. So you have to properly observe. But anyway, HLQ zone's point of view, once a zone is violated, you can't plan. Moreover, because it is a fine-tuned 5 minute zone. Okay, and moreover, it is not a high liquidity zone. Okay, once it is violated, the next one is activated. Below there is one more. But when you see, everybody listen, here you have some learning here. Okay, before prices are reaching, generally how do you plan your trades? Before prices are entering itself, you quickly do analysis. What do we do? Go to 15 minutes. And what is the recently available 15-minute zone? Here you have a failed ERC candle as a leg-in, you have a base candle, you have a drop candle. This 15-minute zone may be slightly pierced, but okay, because pierced zones you will be using as a target zones. So this 15-minute zone, we want to plan our target. So when I want to plan this 15 minutes target, if I am taking entry here, I am not getting 1:3 RR. That's why what I did, I fine-tuned the entry until I get 1:3 RR. See here, if I plan my trade here, I am achieving 1:3 RR. See, let me move up till the proximal line of this 5-minute zone. What is the RR I am getting? 2.22. This concept several times I explained. Maybe many new people are also now listening. Please, it will be a new concept for them, for the existing members who already completed this HLQ analysis in one of our earlier HLQ analysis. Maybe it is a revision for you. But others, new members who did not listen, fine-tuning the zone, concentrate properly. See, generally you plan your trade here. See, this is our entry. With stop buffer, this is our stop loss. So this is going to be your risk. And target should be your 15-minute zone. Here we have a 15-minute zone. What is my 15-minute zone here? I have a failed ERC candle as a leg-in, one base candle and drop. So till this 15-minute zone, when I marked, I am getting only 1:2 RR. 1:2.2. Say 1:2 RR I am getting. Do you accept 1:2 RR trade? No. Minimum 1:3 RR is there. But here I have an excellent fine-tuned 5-minute zone. Do you feel like to miss this trade? No, I don't want to. I want to get some profit from this zone. If I want to get some profit from this zone, how do you plan your trade? Without RR. That's why the technique is fine-tune the entry. What is fine-tuning the entry? You take your entry inside the zone, not the proximal. Where exactly inside? The place where you get a minimum 1:3 RR you take. Suppose I am getting that, if I take my entry near the distal line, then I am getting 1:3 RR. Can I take? No, you cannot take. At least it should be in the middle of the zone, not near to the distal line. If we are going very near to the distal line, there are higher chances your stock might be stopped out. When it reached almost near to the distal line, there are higher chances it may further go below that. So that's why some kind of trade-off is required. So up to maximum where I can accept. Okay, now you reduce further. You are getting, now RR is increased to 1:2.4. Further reduce. See, now RR is increased to 1:2.67. Further reduce. Now I got 1:3 RR. Got it? So this is the way you plan your trade. Once prices reaches here, then you take your trade. Don't take your trade before. Before, if you take, you are not getting. Okay, can I plan my trade here? Yes, you can plan here now, because you are getting 1:3 RR. But is there any risk involved here? Not the actual risk, but sometimes you might be missing the trade. Why you might be missing? Before reaching your fine-tuned entry, prices again will start moving up. There might be strong order flow just before you fine-tune the entry. So what to do in that situation? We can't do anything. Anyway, you are not having RR. When you are not having RR, you don't take the trade. If price did not reach your fine-tuned entry, anyway you will be missing the trade. Fine, leave it. But luckily, if prices entered into the fine-tuned area, you will be getting a trade, right? So that's why something is better than nothing. Such kind of concept this is. Luckily, if price entered in the fine-tuned area, you get the trade. If they did not enter, you will be missing the trade. Anyway, before that, you can't take trade because RR is not there. So, but here RR you get. So this is how you should fine-tune your entry. Exactly that is the way we fine-tuned and planned the trade here. We got the entry. But before you got the entry here, see in this candle we got the entry. In this red candle. After that further below it went, but already we got the entry. After you got the entry, many times what will happen? Prices sharply it will move up and maybe prices will be moving nearing to your target zone. Sometimes very quickly it will go. Sometimes your candles will be closed. If the candles are closed, if your candle is a drop candle, probably a new targets you will be getting. That is what happened here. See, this is your earlier planned 15 minutes target. Now all of a sudden what happened? You have a rally candle, you have a base candle, you have a medium size candle also part of the base. Now your base is having two candles. Now this is the candle you got the trade. At the time of taking the trade in this zone, this candle is not completed. So you took the trade. Once you took the trade, this candle is completed. And with this close, this candle looks like a drop candle. If that is the case, your previously set 15 minutes target will be changed. Now you may say, till this newly 50, see here I have drawn a black color line. This is the low of the newly created, this rally base drop. Now let me adjust now so that you get clarity. Now this will be your new 15 minutes target. But till this new 15 minutes target, you are not getting 1:3 RR, right? Once you take the trade, you don't bother about the RR because you are already in the trade. Even if you get 1:2 RR, till this newly created supply zone, your target zone, you have to exit. No other choice. Because already you got a supply zone. If before taking the trade, if the supply zone is formed, you might have avoided the trade, or you might have further go down, adjusted, fine-tuned your entry. And if 1:3 RR if you are getting, you plan your trade. If this candle would have been closed before you take the trade, but this candle is closed after you took the trade. As per your old analysis, this rally based drop is your target. Till this area you fine tune. Once you took the trade, the 15 minutes candle is closed after you took the trade. At that time, because of this 15 minutes candle, it is looking like a new rally, two base candles and a drop candle. Due to that, now you have to revise your target. That is what we did. That's what I have drawn this black color line. Now I revised the target. With this revised target, sure you won't get 1:3 RR. But you have already or you took in the trade. If earlier you would not have taken this trade, or you might have fine-tuned the entry. But once you took the trade, nothing is there in your hand. Whatever the RR, even if it is 1:1 RR or even 1:1.5 RR, even less, still you have to book your profit. That's it. There is no other choice for us once we took the trade. We have to respect the revised target because market is dynamic. If you would not have respected, see what would have happened? Check, this is a classic example. After that, it reached this new 15 minutes supply zone. See how sharply prices came down, and this entire zone is violated, and our trade would have been stopped out. Rather than booking the loss, booking the profit is much better, right? So that is the reason why once you take the trade, you don't bother about the RR. Whether you achieve the RR or not, you don't bother. At the time of taking the trade only, you should focus on the RR. Once you took the trade and the new zones are created, you have to exit at the new zones only. So this is the concept. Maybe this is the 4th time or 5th time I am repeating this concept. Some people attended earlier, maybe you have a perfect knowledge on this, but new people, newly trading supply demand zones, you should be very properly do this kind of analysis. This is a very good learning for you. Okay. So after fine tuning the zone entry and the new, not only you fine tuned the entry and also you revised the target. Both things happened in this trade. Both the things happened today. Probably this is the first time it happened like this. Earlier we fine-tuned, reached the target. But after fine-tuning the entry, now revised target also we got. A new target. So that means we did both the activities. Okay, anyway, from this newly created 15 minutes supply zone, newly created 15 minutes supply zone, what is the profit we got? We got 2,300 rupees. And you got 2% ROA. But profit is a profit. Maybe it is small, but good. Profit is a profit. Both together you would have got 5.7% on your capital. Because after closing the first trade only, you took the second trade. Same capital, using same capital, today you would have got 5.7% ROA. So this is the only one trade executed today and gave you 2 trades. And after that, what happened? This zone is violated because I already came somewhat close to the distal line. Maybe this time it is violated and fully violated here. First pierced and then fully violated. But below we have a high liquidity zone, right? But prices did not come. Otherwise we would have got again a very good profit. Before itself prices were started moving up. And again at the time of closing prices came near. That way we didn't get the third trade in this stock. Otherwise you would have got a third trade. Market is over. Okay. Apart from this, if you are using Nifty Bank Nifty supply demand zone chain, you would have got again an excellent trade in Nifty also. Even though this is not a directly daily 75 minutes HLQ zone strategy, but I want to show you how important some of the critical levels in Nifty based on our supply demand zone chain. Because we are using supply demand zone chain, high liquidity zones we are using at 5 minutes level, 15 minutes level. See how 5 minutes level high liquidity zones, how perfectly they are working. Look into Nifty. Go to 5 minutes time frame. See, yesterday we discussed about PR zones. At the time I talked about Nifty also. If you would have looked into my yesterday's HLQ zone video, that is today morning only we posted. Because of the delay in processing the video. So today morning only I posted the video. If you would have looked into that, you have seen this. It is there already, this zone is already there in my chart. This 5 minutes HLQ supply zone. Previously we got a trade here from this zone. We discussed about this. How our HLQ zones are working. 2 opportunities it gave earlier. Third one also gave, but with some buffer only you would have got that opportunity. But see today what happened? Today it gave an opportunity. First it gave, came down, not good enough. Again, once again, second time. In case first time, if anybody missed the trade, second opportunity you got. This time it pushed 110 points down. Maybe you might have captured 110 or maybe you might have captured 100 points or you might have captured 50 or 60 points. It's all depending on your trading style. But you got good profit today. Those who used Nifty supply demand zone chain. Yesterday when I explained about this PR zone strategy, how it moved, I know that the prices will be reaching here and again some extent you will get a profit intraday. That is what happened today. What will happen in the coming days? Once again it will touch and again sharply it will come down. That is another possibility. Or there is another possibility. This time this zone might be violated and again may reach the next 5 minutes high liquidity supply zone. Anything can happen again. This is one trading opportunity our supply demand zone chain has given. Not only this, strictly speaking, you might have got another trade opportunity. Here we have another high liquidity zone is there. The 5 minutes high liquidity zone. Maybe somewhere here, I am not sure, I think maybe somewhere here there is a zone. Maybe this is the one. Please correct me if I am wrong. There is a, suppose if this is the one, but definitely here one high liquidity zone was there. Let us assume maybe if this is the one. Today it gave an opportunity from this area. First opportunity here. I think this is only. See, it is slightly pierced when you got the opportunity at 9:15 today. But not 9:15 1 minute candle, I think. Go to 1 minute candle. So this is 9:17 candle. If it is a 9:15 candle, you would have avoided the trade. This is a 9:17 candle. Definitely you would have taken a trade. Slightly pierced. So definitely you can't take the trade next time. But this time you already took the trade. You are in the trade. After that you see second time it came. You might not have taken a trade second time. Maybe if you are still in the trade, further pushed, I think it has given you around, say for example, if you took the trade here, it is 22,554, say round value 555, 22,555 here, 22,470, 475, 22,475. Let me 22,555, right? Here it is 22,555 minus at the bottom level I am calculating 22,475 round value I am giving. 80 points move it has given from here to here till the bottom. 20 points, 80 points more. Okay, from this 80, exactly 80 you calculated, I am not telling. You might have exited maybe after 1:3 or it's all depending on your trade planning and all. But let us see what is the maximum RR it has given today. The high liquidity zone. See, this is our entry. Maybe some stop buffer approximately I am drawing. Let us assume this could be our stop buffer. See, here itself you got 1:2.72. So you might be expecting a minimum 1:3 RR. Somewhere here you got. That means here you might have exited. It gave you 1:3 RR successfully. Anything 1:3 RR if it is given is a successful trade. You might have kept it here. You might be holding. Prices moved up fine because you will exit only where stop loss is violated. Again came down, finally gave you. This is the first. This is a high liquidity zone. 5 minutes high liquidity zone. Given by our software. Look into our supply demand zone chain. In our video, yesterday's video, supplied in our premium report, look into this. You will find this zone as a high liquidity zone. Today it gave you this opportunity. Okay, now again came prices. Can I take one more trade here? No, you cannot take it. Here itself you cannot take second trade. Because it is already pierced. Once a zone is pierced, that's it. You have to eliminate that stock from your HLQ zone strategies point of view. Other strategies you can plan, that is a different story. But HLQ zone strategy, we don't want our zone should be pierced zones. Okay, this is gone. After that again what happened? The main 5 minutes, of course both are 5 minutes only. The one I am saying why it is main is why I already kept in my chart. This is prices came with a gap here. Such kind of zones many times you have lot of power will be there. After the zone is violated, maybe some any hidden order flows within the gap, again it will push the prices down. Many times we get success. Many times institutions add new order flows. See today what happened? Prices came in this area, came down, small only, it is not a 1:3 RR, once again moved. This time it gave a big push. You have to see, when you already took the trade, you will be still holding the trade. You can't exit again, it is moving up. Once it is 1:3 RR, maybe you use a trailing stop loss and then you exit. But it is not reached. Many times before reaching 1:3 RR, lot of up and downs will be there. Second time price enter into the zone, again prices will come down. How much RR you would have captured here? So here also maybe some stop buffer here. Approximately I am adding stop buffer. So let us say this is your entry. It gave you 1:3.7 RR maximum, but 1:3 if you exit. Okay, somewhere here you might have exited. Somewhere here you might have exited. Suppose if you are using 1:3 RR, how many points you would have captured? Approximately I am saying. Maybe 90 points, around 90 points or close to 100 points. Depending, suppose if stop buffer is a little extra is there, some more extra profit you would have got. But definitely around 100 points you would have captured from this trade. Earlier trade, 1:3 RR, maybe around 70 points you would have captured. And this one, 90 points. See how Nifty has given you. Especially the 5 minutes high liquidity supply zone trades from using Nifty supply demand zone chain. You may ask a question, why you are so confident that from here prices will go down? Because by the time prices reach here, your Pearson zone strategy gave you more than 500 points, close to 600 points. What could be the value here? This is around 22,621. 22,621 minus your Pearson zone strategy point of view, you would have taken a trade here. And what is the value here? 22,987. Some mistake I did. Oops. Here you have 22,621 minus here 21,986 or 987, 21,987. $634 points we captured. That is what I am saying, approximately 600 points. So from here to here, you captured 600 points. So definitely Nifty will react. It has to react because critical levels already they kept a high liquidity zone. There should be some profit booking or anything. Maybe if this Pearson zone strategy even much stronger, maybe some moves it will give. Maybe tomorrow or day after tomorrow, this 5 minutes high liquidity zone might be violated and further it will move up. That is one possibility. Another possibility is, now this is, institutions felt this is good enough for us, we got. They add a new order flows. lot of strength they will be adding. Once price reach, they will push it like anything, and again prices will be coming down. It won't come one day, single day, right? Lot of up and downs will be there. New high liquidity zones will be created. In between, prices will be moving, and finally, after 1 week or like that, this fine-tuned 5-minute zones will be violated, and then prices will be go to the next high liquidity zone, which is there below this zone. See, below there is one more fine-tuned 5-minute zone is there. This is also part of piercer zone strategy, not high liquidity zone, piercer zone. This is the fine-tuned 5-minute zone inside piercer zone. Piercer zone, we have these two order flows. This one again, it will push the market. Maybe next time it may further go up above this. That is one possibility. Or it may give you another some 250 to 300 points, and then again it will come down. And below there are some more order flows are there. Because more order flows are there below that. We have analyzed all these things on 14th January, monthly demand zone chain. There is, I think we have seen some trap, something like this. Till the trap area, finally, they may push the possibility, one possibility. And from there again, a new rally will start in our market. Because previously also 2 years back, similar kind of things happened. So many days prices were within the monthly zone. Played a lot. And finally from the trap area, bear trap area, captured all the people and pushed the market up. I'm not saying it will repeat. Maybe. Now itself it may started moving. We never know anything. The only thing we know is where the opportunities are available. Those opportunities, how we should convert into the profits. Either a short-term profits or a intraday profits. If trends are changed, then swing level profits. As of now, swing trades are not enabled. We are capturing only intraday profits or short-term profits. See, this is a short-term profit. Those who are holding short-term profit, probably this is the area you might have booked the profit. The reason is after that here you have a pro gap area is there. Maybe some of you might have already booked here in this pro gap area. But this is consumed. But at some time demand will be weakened. At the time, the pro gap will be further pushing the market down. So we never know that, right? So that's why wherever opportunities, just utilize them and get the profits. So this is about Nifty, and remaining we didn't get trades, but quickly let me show you what happened. Bharti Airtel already we discussed in our previous HLQ analysis video, the video uploaded today morning. But today we didn't get any trade opportunity. Here, see here we have a piercer zones are here. Yesterday we in that video I explained. But our trade plans will be here, HLQ zones point of view. This, in case if anybody is planning here, it could be piercer zone strategy, not HLQ zone. And next one is next one is Prestige. Prestige, I didn't fine-tune the zone because I think yesterday also we discussed this. We don't have proper 75-minute zone. No. Yesterday we didn't discuss. Yesterday that is a different stock. The reason why we didn't is here all these are all very large candles. See here. Maybe you can consider this is medium, but this is a lot bigger than medium. Failed ERC candle. So in between no base candles here, so this zone has to be violated in the coming days. Or maybe institutions create a new order flow this time and push the market. In the next retracement, we get a trade opportunity. Until then, we won't plan trades in this zone. Next one is IGL. IGL is also a daily zone. Supply zone. This is a supply zone. IGL also not having any 75-minute zone. I think maybe yesterday we discussed IGL. IGL is not having. I think this is the one we discussed yesterday. We have a drop base, rally is there, drop is there, in between no base candles. And next one is Patanjali. Patanjali, here we don't have drop, base, drop, we don't have any order flow at 15 minutes time frame. Go to look into the 15 minutes. See, 15 minutes, all are base candles. So many base candles. Even if you hide the candle, all these candles. So many candles are there. So that is the reason why this is the area we are not planning any trade. This will be violated easily. But here you have a 75 minute zone. Let me go to 75 minutes time frame. So this is the 75 minute zone. We have a failed ERC candle as a drop. You have 1, 2, 3 base candles and a drop candle. See, this is the failed ERC as a drop candle. So within this 75, again fine-tuned with 15 minutes time frame. Look into the 15 minute zone. You have a rally candle, you have a base candle, you have a drop candle, follow-through candles. So this is a fine-tuned 15 minute zone. Inside the fine-tuned 15 minute zone, you should find 5 minute zone. So let's go to the 5 minutes time frame. So inside that fine-tuned 15 minute zone, you see here. So this is a failed ERC as a rally leg-in. You have 1, 2, 3 base candles. They moved in a narrow range prices, and then drop candle, follow through candle. So this is a nice fine-tuned 5 minute zone. So this is the area we can plan our trade. But today prices did not enter into that area, so we didn't get any trade opportunities. Next one is a power grid. Power grid is a daily high liquidity supply zone. It looks like prices came near to this zone, right? But it did not. And even if it is near, you can't plan a trade because that is a 9:15 1 minute candle. That I will show you. And this is a daily zone. Drop, 2 base candles and drop. I don't know, previously I explained fine-tuning this zone. But anyway, let me explain. We have a 275 minute zones here. Drop, base, drop. And again drop, 3 base candles and a drop. So we have two 75 minute zones. Inside 75, again we have to fine-tune 15 minutes. So go to the 15 minutes time frame. In the 15 minutes time frame, you see here, you have a rally candle, you have a base candle, and then you have a drop candle with hidden body pro gap. And here also you see, here you have a drop, base, drop. This is the 15 minute zones inside 75. Okay, now within these 15 minutes, again you should identify 5 minute zones. Go to the 5 minutes time frame. So in the 5 minutes time frame, here you have a rally candle, 1, 2, 3 base candles moved in a narrow range, and then a drop candle. So this is the way drawn the 5 minute zone. And here also, here you have a rally, 1, 2, 3, 4 base candles and a drop candle. I'm not comfortable with this candle. This is a big candle. If you hide this, see, all of a sudden, it is looking like a big candle, very big candle, right? So that's why what I did, I want to take some help from 3 minutes time frame. I went to the 3 minutes time frame because sometimes you can use 3 minutes as a supplement to the 5 minute zone. So 3 minutes identified the zone. Excellent, fine-tuned zone. See here, you have a rally, base, drop with pro gap. So instead of 5 minute zone, I have drawn 3 minute zone. Advantage, risk is reduced, and also identified the order flow inside the 15 minute zone. But anyway, today prices did not enter, but they came very close to the zone. Have you noticed here? This is the candle. Came very close, but not good enough to plan your trade. Even if it come near to this, we would not have taken the trade because this is a 9:15 candle it happened. Let me go to 1 minute time frame, you get clarity. See, today morning in the 9:15 prices reached here and then came down. Oh, sorry, my mistake. It is not 9:15. It is morning 9:18 candle, 9:18. But why we didn't take trade? Because it is not near. Even if we add 0.1% also, the price is not near to this zone. So that's why. This is not, it is a short of our zone. Maybe if it could have entered more, we would have got a trade. I have mistaken because morning I have seen this chart and I forgot this is I was thinking it is 9:15 candle, 1 minute candle. Okay, anyway, we didn't get a trade opportunity. Prices came somewhat close, but not good enough to plan the trade. Otherwise, it could have been a very good profit in this. See how it sharply came down. It could have been a good profit. But anyway, we can't get this trade. Next one is a Divi slab. This is 75 minutes, high liquidity demand zone. Divi slab, we have two fine-tuned zones. One is 15 minutes. See, drop base rally and again drop base rally. You have two excellent 15-minute zones. Within the 15 minutes, fine-tuned with 5 minutes. We have a drop candle, 1, 2, 3, 4, 5. Actually, this is somewhat, I'm not really comfortable with this candle, but I have drawn the zone. Just want to see what, even 3 minutes also I'm not comfortable. See, if you hide the candle, you will see. Why I did not feel comfortable, you will understand. See the length of this candle. This is a large. Is it a medium size candle or little bigger than medium? I am in a dilemma. Okay, these are the medium size candles, I agree. But this is a large candle. But still, I just, not for trading point of view, I thought of observing what is happening today. But today anyway, prices did not come. And here you have a drop, 3 base candles, rally and follow through candles. This is the area some concerns are there. But today see what happened. Prices somewhat came close to this. Again drop base, rally created. But if you consider this base candle is looking bigger than this one, right? This base is bigger than. That way you may take this trade. These are the different questions are there in my mind after looking to this price action. But anyway, today price did not enter into this fine-tuned area. Next one is Max Health. This is also a 75 minutes demand zone. Here our software identified this zone as drop candle, 1, 2, 3, 4 base candle and a rally candle. A big zone, a very big zone. The moment we go to the 15-minute zone, 15 minutes here, because recently prices came near the digital line, so obviously we have to take latest order flow. This could be a drop candle. See the close of this candle, if you add some more body, definitely this will be a big candle as a leg in, and you have a base and you have a rally, 15-minute zone. But still this is a very large. But if we have a fine-tuned 5 minutes with manageable risk, we can plan our trade, right? So that's why we went to 5 minutes. But unfortunately, 5-minute structure is very bad. You can't, we don't have any zone at all. See here, in the 5 minutes, you have a rally candle, again with some gap here, again rally candle, and no 5-minute zones here. Without 5-minute zone, how do you? Any lower time frame horizons, I see here also I did not find any lower time frame horizon at 5 minutes level. That's why I thought maybe this zone will be violated. See today what happened? Throughout the day, prices were moving within the zone and going down. Maybe tomorrow or day after tomorrow, prices may further come down. This might be violated. This time, if institutions create any new order flow and push, next time we get trade opportunity. Otherwise, this zone will be violated. Here a daily zone is here near to that. Actually, today prices entered into the daily zone, but daily also there are no proper order flows. Not very clear. Otherwise, we would have got a trade in the short trade. This is a daily zone. This is a 75 minutes zone. But software identified this stock near 75 minutes demand zone. Okay, next one is a trend we already discussed. That is the one we got the profits. And last one is LTM, L&T Mindtree. So this is a 75 minutes zone, drop base drop. I think yesterday we discussed this. We don't have any order flow at 15 minutes. See, the 15-minute structure is not good. Why? After hiding this candle, having gap, we got clarity yesterday. We have a candle, a large candle, drop candle. But this is not qualified as a leg out. Because if you consider all these base, this leg out will be there inside the zone. So anyways, yesterday we are not comfortable with this zone, so I left this. We didn't plan any trade in this. The same zone continued today also. So these are the high liquidity zones identified from this yesterday's list, and we analyzed. Most important concept you might have learned today is fine tuning the zone, especially the new members. That's a very important concept. If you don't concentrate, listen that topic once again. That's a very important. Fine tuning the zone, entry, not fine tuning the zone, sorry. Fine tuning the entry is a very important skill we should build when you don't have enough RR. Okay, let's take a break here. Let's all meet again in our next video. Thank you.